Let me tell you something about ARMs. Sorry. ARM loans. What are they? I'll be quite frank with you. Not really sure what they are. I've never really seen them. As long as I've been doing real estate, it's like, yeah, I've heard of them, but we really don't ever see them ever. Don't avoid them at all costs, right? Well, I might have to start researching them more, because I got to tell you guys, for anybody looking to buy right now, everybody knows interest rates are crazy right now, and everybody and their mom wants to avoid them, right? And when people want to avoid high interest rates, they start doing some interesting things. And one of these interesting things is the adjustable rate mortgage is on the rise, the return of the ARM loans. Now, I'm not telling you this as a lender, and I will do more research and I will learn more about this. If this ends up being more relevant, then of course I'll learn more about it. But for now, you and I are both learning together what ARM loans are and why we should be concerned. So right now, the way mortgages are set up with fixed interest rate is you got one interest rate, baby, for that's it, for 30 years, 20 years, 15 years, whatever you got. You got that rate and it's never going to change, and they're always using that to base off what goes into your interest and your principal. Okay, so your payment basically stays the same for 30 years, unless you're like your mortgage taxes go, sorry, not mortgage, your taxes go up, or your hazard insurance goes up or something, right? So that's the way things are, and quite frankly, that's the way they always should be. Adjustable rate mortgage has, how I understand them, it's basically broken down in two periods. Okay, there's a fixed period and an adjustment period, and in that fixed period you get a nice little teaser rate, right? It could be reading here in this article, it could be 5 years, it could be 7 years, it can be 10 years. Potentially in those 10 years, you're gonna have a nice low cheap interest rate. And right now, from the products I'm seeing, like the rates they give you, there's like low 4s, high 3s, something nice, something definitely sexy compared to these 5.5, 6.4 monsters I'm seeing lately. So they start you off nice and low, and then depending on the benchmark of when that period is over, your payment goes up. That teaser, whatever period is over, and now you're basically at the mercy of whatever benchmark they set. Now, as I understand it here from what I'm reading, there's two kind of ARMs. There's conforming and non-conforming. Conforming basically means they are allowed to be sold to Fannie Mae, Freddie Mac. It's under government regulations. It's being followed, and there's certain guidelines that were met, so they're normally safer. The problem that we run to are the non-conforming ones, where it's basically like the black market. Yes, it could be a reputable lender, but it could also not be a reputable lender, and I'm guessing those are the lenders that are probably going to provide more incentive rates for most people. Now, here's the thing. With rates going up, price ranges price is going, housing affordability becoming more and more out of reach. People are going to find creative ways to become homeowners. It's just natural. We're not just going to accept our fate and just become renters, right? So this concerns me, because I feel, yes, technically it might not be a bad idea to do an ARM. I say that with, if you get an ARM loan that has a cap on it, and you have your finances be solid, and maybe they give you the worst case scenario, that the highest that rate could ever go, and you're planned for that highest rate, then okay. But the ones where I get worried about is not everyone has not only the savings, but the financial savvy to really look ahead to say, worst case scenario, if this interest rate goes all the way to this number, am I going to be prepared to keep this house? Because what happens is, if it's especially if it's a non-conforming one, and that rate goes high and high and high, and next thing you know, your payment doubles, goes at this really extreme rate, and you're like, I can't pay this anymore. Then we're seeing old trends come up again. So I talked to a lender recently, and they told me, you know what, there's a lot of ARM products coming out soon. So they're not maybe as popular now. It is May 2022. I have a sneaking feeling, suspicion, if you will, that by the end of this year, ARM products are going to be a good percentage of all home purchases. I don't like this. I wish we can just accept that interest rates are higher, and you're going to have to pay more to get a house now. It's just the reality. Interest rates are higher, monthly payments are higher. If you can't afford where you live, move somewhere else. It's just the reality of the situation. But I have a feeling that we're not going to do that, and this ARM loan is going to come back full force, and we're going to be a good percentage of most home purchases, or what you're going to be offered or proposed when you're talking to a lender is going to be an ARM loan. Time will tell if I'm right or wrong here, but it's making me nervous. So now, if ARMs start becoming more relevant, then of course I will do my research, and I'll make sure to... if you're gonna do them, I'm gonna make sure that you're gonna do them in the best way possible. I'm telling you now to try to avoid it, try to go fixed. But if you see no other way, then I'm gonna have to do my research and really get educated on the best ways to do it. But I'm telling you guys now, most home buyers out there probably gonna be being proposed this a lot. So just be careful, guys. Do your research, plan for the worst, think always with your budget in mind. And now that we're doing arms, think do your budget based off the worst case scenario of what the highest the rate could ever go, and then we'll see. And on top of that, we're seeing other kind of loans pop up, and I might make other videos about this, like piggyback loans, and 40-year mortgages might be coming back, and all kinds of, lenders are just going to get more creative to find ways to get you to be a homeowner, and it's going to be up to you to be educated and fully savvy ready. So let me know what you guys would think. If you're looking for an agent, this is like the most saddest ad read. If you're looking for an agent referral, homeandmoney.com/Javy, links in the description. Get connected with an agent anywhere in the country. The best agent referral service, even if it's the same website. I'm still the best. Get it right. All right, guys, take care.